Is Duolingo just a language app, or is it secretly turning into one of the most profitable gamified tech monopolies of our time? Lately, Wall Street has been hyper-focused on Duolingo's artificial intelligence features and subscription tiers. But while institutional investors are busy looking at the macro headlines, Duolingo has quietly introduced small structural product changes that could completely transform their financial metrics in the upcoming earnings reports. If you only look at the surface, you are missing the real investment thesis. Today, we analyze why Duolingo's recent stock correction might be a classic market mispricing, and how a few lines of code dedicated to virtual character outfits and league rewards could drive the next massive revenue beat. To understand where Duolingo is going, we first need to look at where it just came from. From its local lows in early April to its peak just a few days ago, the stock staged a phenomenal recovery, surging roughly 46%. This massive rally wasn't driven by speculation or hype. It was backed by cold, hard data. Duolingo has consistently delivered over 30% year-over-year revenue growth, expanding its profit margins and proving that it can generate massive amounts of free cash flow. More importantly, management answered the biggest bear thesis out there, the threat of artificial intelligence. Instead of being crushed by tools like ChatGPT or Google Gemini, Duolingo embraced the technology, launching Duolingo Max, a premium subscription tier that uses generative AI to simulate real-world conversations. But if everything is going so well, why did the stock experience a sharp correction this past week? The answer lies in broader market mechanics, not business fundamentals. After a strong upward move fueled by excellent operational news, Duolingo's premium valuation collided with a shifting macroeconomic environment. We are currently witnessing a distinct rotation of capital out of high multiple growth stocks and into lower risk assets. This movement is largely driven by mounting market anxiety over potential interest rate hikes under the new monetary policy leadership. When the threat of tighter monetary policy looms, high-growth tech companies are historically the first to experience institutional de-risking. This isn't a structural breakdown of Duolingo's core business. It is a textbook market reaction to macroeconomic pressure. This brings us to the core of our thesis, the hidden power of recent product updates. If you have opened the Duolingo app recently, you might have noticed something new. The company has officially introduced a specialized cosmetic skin system, along with an entirely revamped reward structure for its competitive user leagues. To a casual observer or a traditional Wall Street analyst who doesn't use the product, this looks like a trivial feature designed for children. To a financial analyst looking at user psychology, this is a brilliant monetization masterstroke. Let's break down the mechanics of the new skin system, particularly the recent national-themed rollouts for the World Cup. When Duolingo first experimented with cosmetics, users had to complete specific missions to stack up points, or buy them directly from the shop. But this new national-themed launch takes behavioral engineering to the next level. To unlock these country skins, users are incentivized to complete their daily lesson. This directly tackles the holy grail of app metrics, daily active usage, and long-term retention. But here is the financial kicker. If a user misses a lesson or simply wants to collect their favorite countries instantly, Duolingo makes them available for direct purchase in the store. This creates a dual-engine catalyst. It aggressively drives daily engagement for the core user base while simultaneously unlocking a direct, high-margin microtransaction revenue stream. It's a page straight out of the Fortnite or Roblox playbook, turning cultural events and user loyalty into pure profit with zero customer acquisition costs. Simultaneously, Duolingo overhauled its competitive leagues with advanced tier rewards. Human psychology thrives on status and gamified validation. By changing how users are rewarded for topping their leaderboards, Duolingo has directly altered user behavior. To win these new rewards, users are spending significantly more time inside the application, completing more lessons per day, and checking the app multiple times to ensure they aren't demoted. How does this translate directly to the financial statements? Every extra minute a user spends inside the app drastically improves operational KPIs. For free users, more lessons mean more ad impressions served, boosting advertising revenue. For all users, higher activity levels mean hitting structural bottlenecks faster, such as running out of hearts or lives. When a highly engaged user runs out of lives right as they are about to win a competitive league match, the friction to upgrade to Super Duolingo or Duolingo Max becomes incredibly powerful. This doesn't just increase daily active users to monthly active users ratios, it structurally accelerates subscription conversion rates and boosts average revenue per user, or ARPU. When we review recent investor relations presentations and management commentary, CEO Luis von Ahn has dropped subtle hints about these optimization strategies. The corporate strategy is clear. Land users through highly viral organic marketing, retain them through aggressive gamification, and monetize them through layers of subscriptions and microtransactions. Financially, Duolingo operates with gross margins near 80%. Because their content creation costs are dropping significantly thanks to internal AI tools, almost every single dollar of incremental revenue generated by these new engagement loops drops straight down to the operating income line. However, a rational investment thesis requires extreme objectivity. We must look at the structural risks. Duolingo is currently trading at an enterprise value to sales multiple and a forward price to earnings ratio that leaves very little room for error. The market is pricing in near perfection and continued high double-digit growth. If generative AI models from competitors become entirely free, seamlessly conversational, and highly personalized without the need for a gamified interface, Duolingo could face long-term pricing pressure on its premium tiers. Furthermore, if these gamification updates only shift internal app economics without showing a tangible increase in paid bookings in the upcoming quarterly report, the market might penalize the high valuation multiple in the short term. So, what is the ultimate conclusion? The thesis that cosmetic skins and advanced league rewards will drive outperformance is highly compelling because it leverages Duolingo's core competency, world-class behavioral engineering. While the broader market is obsessed with analyzing the overarching macro environment or waiting for massive structural corporate shifts, the actual inflections in consumer tech companies almost always happen at the product level. These new features structurally improve retention, create a secondary path to monetization, and optimize the conversion funnel into premium subscriptions. While Duolingo's valuation demands a long-term investment horizon and an acceptance of short-term volatility, the business fundamentals have rarely looked stronger. The recent market pullback may look like a warning sign to the undisciplined observer, but for the detail-oriented investor, it offers a compelling entry point into a company that is mastering the art of turning education into a highly addictive, incredibly profitable global tech ecosystem. What are your thoughts on Duolingo's new strategy? Do you believe gamification can continue to drive massive subscription growth, or is the valuation simply too high to justify at these levels? Let me know your perspective in the comments below, and don't forget to subscribe for deep, fundamental financial analysis. See you in the next video.